Hi there, welcome back to Investing Rules. And on today's program, we're going to be talking about Google, which is one of my favorite companies, and it's the largest holding in my portfolio. Now, you do get people saying at the moment that ChatGPT and artificial intelligence and a lot of other companies are threatening Google's competitive position at the moment. But I think that's flawed to a certain degree because these AI tools are useful for certain things, as I'm about to illustrate, but they're not so useful for other things where Google are really making their money. So if we just use Google to look up car insurance here, for example, what you will undoubtedly already know is that Google makes its money from people clicking on the adverts that appear in their search results and also on their other products, which include YouTube, an ad network, which allows their advertisements to appear on a variety of websites within their ad network, but mainly, of course, in the actual Google search results. And as you can see here, I live in the UK, so we've got a number of different companies here offering insurance and allowing you to compare insurance. And every time somebody clicks these links, Google is making a considerable amount of money, obviously, because insurance is a very competitive world. You have to pay quite a lot of money to appear high up the search results. Now, if we do compare this with some of the emerging technologies that we've got at the moment, like ChatGPT, let's just make that comparison. Now, if we just look up something on here on ChatGPT, let's try car insurance again. Maybe you could even try in a particular city, maybe like car insurance in New York. Let's see what this comes out with. So what it's coming out with is rules about car insurance, but it's not really very helpful in offering us maybe companies that are able to offer us car insurance. So you can see that this is quite weak in that respect. Now, you can get some more specific results from ChatGPT. Let's find, for example, let's look up best cardiologist in New York, which on the Google obviously is probably a keyword that's very popular and probably worth quite a lot of money for Google. So we can try this on ChatGPT. Let's see how this performs. Best cardiologist in New York. So I think we will probably get a list of names out of this. So here we go. So we are getting a few cardiologists in New York. But the problem with this is, as this is a sort of AI model, it does have to give us basically sort of accurate information rather than sponsored information. And it's quite difficult to get ads into this sort of a system without really manipulating the information in a really dodgy way. Whereas with Google's model, it's perfectly fair to put advertisements at the top of search results. Whereas with an AI model, it's quite important that they design it to be very accurate in terms of the answers that they're giving and not just allow sponsored results to appear within these replies. So that's a clear difference there, and that does make the AI model a lot more difficult to monetize than Google, for example. Now, I've just opened up this really long-term view graph for Google's share price, and you can see that this is an absolute compounding machine. $2 back in 2004, and now we're at $183. There's been some stock splits along the way, so this price is adjusted. But the point is, this has been an absolute compounding machine, and now it's even paying a dividend. So this is a stock which is starting to become attractive to even dividend investors. And this is all based on basically making money from Google search results. There are other business divisions, but that is where the bulk of the money is coming from. When you type a search into Google, if there's an ad, then that's where Google is making the money if you're clicking on that ad. Based on recent media coverage, you might be under the impression that Microsoft with ChatGPT, probably the leading company in terms of artificial intelligence, but you can see that actually consumers think that Google is the leader, and that's based on research by Jeffries. You can see that 63% of people associated Google with artificial intelligence, followed by OpenAI at 51%, Meta at 44%, and Microsoft at 28%. So Google is absolutely a leading company in this area. So that brings us on to just valuing Google quickly with the discounted cash flow method. So what I've got here is Google's stock, as you can see, and the current stock price is $183. And this calculator here is saying that it's got a fair value of $207. Now, the assumptions for that are we're adding in the tangible book value because Google has a really, really strong balance sheet. So we're adding that into the valuation. And we've got a discount rate of 11%. Now, that's quite high. It's quite high. So I would actually probably lower that down to 9. That's the investment rate of return that I look for in my portfolio. So if I put that to 9, we can see that it's actually even more substantially undervalued because that would give it a fair value, as you can see here, of $273 We're going to assume actually a growth rate of 10% rather than 20 or 15. That's very, very, very conservative because that's a very low rate of growth because over the last 10 years, Google's earnings have grown by a compounded rate of 21.8% per year over the last 10 years. Over the last 5 years, 25.9%. And over the last 3 years, 32.3%. So this is a really, really, really fast-growing company, even though it is absolutely massive. So if we're putting a growth rate of 10%, that's really, really conservative. And of course, if we put, for example, 20%, you can see we're getting a fair value of $386, which would make it even more undervalued. I can't really emphasize how much this company is really, really super cheap compared to how much I think it should be trading for on the stock market at the moment. So I think this quick DCF calculator is quite useful. So with that in mind, let's talk about something else. So now I just really want to emphasize what a high quality company Google is in terms of its earnings. So you can see here we've got a gross profit margin of 57.47%. So that's massive, an absolutely massive profit margin. Even compared to the wider sector, it's beating the sector by 15%. Net income margin, very similar sort of story. The sector median is 3%, and we've got 25% margins for Google. Return on equity, 3% of the sector and 29% for Google. And obviously this sector is technology, so really, really impressive that Google is doing so well. If we look at how much money the company is generating per employee, Google is making almost $500,000 per employee annually, and the average company in the sector is making just under $9,000. So that's a 5,000% difference between Google and the sector. So overall, what I'd say about Google is that it's a massively high quality company. You don't need to worry about artificial intelligence from other companies, ChatGPT or whatever, really threatening its competitive position anytime soon. And this is just a company which has grown and grown and grown over the years. And I think in the future, it's also very likely to be generating lots of money as an enterprise, and also for its shareholders, and also very exciting to see that it's now paying out dividends. So you can get rewarded for Google's success over time, and hopefully we'll see that dividend growing over time. Thanks very much for watching. This has been Investing Rules. And if you want me to cover any other companies, please just let me know in the comments. Thank you very much.